Wrong and Search. True traders react to the market.
Hello everyone, I believe you are here because you find our operator analysis will be very helpful to your investment. In this video, we will be sharing with you on how operator analysis will benefit you in trading compared to other analysis. The objective of our training course is to train you to achieve consistent profit from the stock market by riding with the big boys starting from their accumulation. You are about to see something that will open up your mind in this video. Technical analysis and fundamental analysis are commonly used in the stock market, but I am sure you can't find operator analysis anywhere else because operator analysis is developed through our 12 years trading experience in the stock market. It is one-of-a-kind analysis that based on riding with the big boys theory. The strategies and analysis are specially developed for KLSE market only. We develop operator analysis is because technical analysis is not reliable and it doesn't tell us the big boys' intention when the price falls. Let us share with you how operator analysis is a better technique to find the right stock compared to technical analysis. The tools for us to analyze the market intention are slightly different compared to technical analysis. Technical analysis often use charts and indicators to find the right time and the right stocks. However, I find the signal and result are often lag and slow to react. It always put me in a situation wondering, is it a trend reversal or is just a retrace? If you apply technical analysis, you will experience the same situation as me. If you exit too early, price goes up. If you wait, then your profit will turn into losses. This is why I spend more time understanding the big boys' intention to help me understanding better on the price movement, whether it's a short-term retrace or the big boys dumping their shares, is all clear to me right now. Our entry rules is totally different from technical analysis because in the past I always get trapped in a resistance breakout. To fine-tune our entry, we spend time analyzing the price and volume action before big boys pushing the price up higher. We were surprised from our data collected. Big boys often use resistance breakout to attract buyers in for their profit taking. This is the answer to why traders and investors always get trapped at resistance breakout. From our data shows, the best entry point is far below the resistance breakout, which we will be sharing in our training course. Let's look into the example on how operator analysis is much better than technical analysis. Technical analysis often have their entry at the resistance, which often retrace right after the breakout, just like the one that we are sharing here. Operator analysis entry was around 16 cents, where right after the accumulation, which we call the moving house. But we missed the lower opportunity. We have to move in at 20.5 cents, where we are not afraid to move in at the higher price because we see the big boys just did the accumulation before this, and they usually would not just stop at 20% or 30% of price gain. The second example here was also happened last year, where our entry is at 17 cents, just right after their accumulation. But if you follow technical analysis, your entry will be much higher at the resistance breakout price, about 22.5 cents. With operator analysis, you will get entry advantage over the rest of the traders or investors who use technical analysis. By knowing the big boys' intention, you will have a lower entry price than the rest. We are able to achieve higher profit point than technical analysis. The reason is because operator analysis react to current intention of the big boys, but technical analysis take profit with the target which derives from the historical price movement and traders' expectation. This is more like a guessing game than following the market. Here are the examples from our trading history. Our take profit price is at 0.40 comparing to technical analysis take profit target around 31 cents. We are 9 cents higher and the price start to peak when we exit. This proves that operator analysis is able to follow the big boys not just in lower entry but also take profit nearer to the top. Our cut loss rules is based on the price and volume action to determine the intention of the big boys. So once we see they created more volume than the day of our entry day, but the price don't move up much, then we know they are attracting buyers to sell for profit. And that's when we cut loss near our entry price. That's why our cut loss rules are more efficient than technical analysis cut loss point. Our cut loss rules is much closer to react to the market rather than setting a fixed percentage cut loss price. Our cut loss rules help us to lower our trading losses because we don't set cut loss point like technical analysis. We follow the market by analyzing the price and volume movement, such as high volume came in but price don't push up much compared to previous day price. This tells us that the big boys are churning the volume to attract investors to jump in, giving out the wrong idea of a bullish stocks. Our cut loss rules protect us from further losses. It also helps us to exit with the big boys when they are selling their shares for profit. For example, in this case, the price break the resistance and went back down to 21.5 cents. If we follow the technical analysis traditional cut loss rules, it will be around 10% from the entry price. Assume they enter at 25.5 cents after the breakout, then their cut loss point will be at 22.5, which the price went lower to 21.5. If they follow the cut loss rules, and they will miss out the opportunities, or they might ban the cut loss percentage after a few times of being tricked by the price rebound. But how do you know when to change and when not to change? So why bother to change when we can use the same rules for all trades? Because we apply rules, not target. So every stock's cut loss point will be different. I'm sure you are pretty much agree to what we have shared about the ineffectiveness of the technical analysis. I'm sure you want to learn more about operator analysis and move in and out with the big boys. If this don't really convince you much, you will definitely be very much convinced by the following topics.